Hello traders, in this video we're going to go over the results so far of my small cap market open trading plan. That's this plan right here. If you're interested in downloading it, it is available at patreon.com/tradingarmor at the battle plans tier level. That includes all of the trading plans that I have up, which are the small cap trading plan, mid cap trading plan, swing trading plan, and binary options trading plan. And any other plans that I come up with in the future will be included at that level. And you also get access to all of the other tier levels, which include spreadsheets to track your trades and multiple trading calculators to calculate your profit target while you're in the trade. You see me use those in every trading video, and I just wouldn't be able to trade without them anymore. So one other thing I just want to say while we're on the Patreon subject, first, thank you to all the patrons, new and old, especially the guys that have been around since day one. I'd like to respect people's privacy, so I'm not going to mention any names, but you know who you are, and I hope you're finding the tools useful. So the other thing you may have noticed is I've had to change the payment to at the beginning of the month instead of at the end of the month, because before it allowed people to sign up, stay for a month, and then just before the payment is due, they can ditch. So I've had now multiple people sign up, download content, and then leave before the pledge comes due. So unfortunately, I've had to change the payment to the beginning of the month. So anyway, let me know if you have any questions about any of that stuff in the comment section. Let's go over the results of the plan so far. So I wanted to take I am taking 100 trades with this plan, and we've taken 58 so far. And I'm just going to give you like a broad view of what's going on here. So this is trade number one, and all of the data that I am collecting on each trade is pretty much the same on every trade, except for I only need to have the market cap on the first trade because we're trading the same ticker symbol on every single trade. Then I have notes at the end. Did I execute to the plan? And that kind of thing. So now, if you look at this quickly and you see, wow, there's a lot of red right here, and then, you know, a kind of a splattering or smattering, I guess is the right word, of green, you might think, well, there's something wrong here with the plan, or maybe I changed the plan to all of a sudden become green, because this plan is profitable, and I'll show you that at the end. No, that's not really what's happened. This is just statistics playing out over time, and that's really all that day trading is you need to have a plan that you can trade the exact same way every day and find out where your break even is in that plan. For me, I'm trading all or nothing 2R, so that means on every single trade, my reward is twice my risk. So if I risk, say, $10, my reward is $20. And with that type of a risk management, the break even's 33%. So anything above that is profitable. We're also tracking 3R, which is 3 times the risk. And with that, a break even win rate is 25%. And anything above that would be profitable. So the whole point I'm getting at is that just because you see a string of red trades, as long as you're doing everything according to plan, keep trading that plan until you hit 100 trades, because that's the only time when you're going to know whether or not what you're doing works or not. There's something called the law of large numbers. If you're not familiar with what that is, you can Google it. But basically it says that you have to take a test. Obviously, you have to repeat that test the same way every time, but you have to take it out to 100 tests or sample sizes before you're going to know the results. When you go from, let's say, 10 to 20, there could be a huge variance, or from 10 to 50, there could be a huge variance. When you get to 100, and if you go from 100 to, say, 1,000, the change is minimal. The coin toss test is a classic example of that. If you start flipping a coin in the early tests, you may get results of, wait, even though I know this thing is supposed to have a 50% probability of going heads or tails, I'm getting, you know, a 67% likelihood of heads versus tails on the first 10 flips, and that's very possible. But as you get closer to 100 flips, you're going to see that number get very close to 50%. And if you continued that test to 1,000 flips, it's just going to get that much closer to 50%. So that's kind of the whole point of the law of large numbers, and also this test trading and testing it out to 100 trades. So that's what we're doing. We're at 58 trades so far. And as we scroll down, you can see lots of red here on that first trade, and I'm going to talk about that. And then the second trade, there's quite a bit more green. This is just stuff I need to clean up here on the spreadsheet, but there's a lot more green, at least relative to red, on that second entry. And then the third trade, there's just not that much data here, so it's not that meaningful yet. So let's take a look at the results so far. So this is just the cost of running the test. The P&L is not going to be accurate until we're trading the same position size on every single trade, and that is not something that I recommend doing until you've taken the test out to 100 trades, because you don't know yet whether or not it's profitable. So if you just trade one single share, you're just going to accumulate a small cost. We've taken about 60 trades so far, and it's cost us about $4. So that's pretty cheap. If you're just doing random things, or you don't know if what you're doing is working and you're trading full share size, I can guarantee you after 60 trades, you're going to be in a lot more red than that. So how do we know if this thing's profitable or not? By tracking the R value. Again, we're holding the 2R, and we're only up 1 time our risk right now, which is not much, and I'll talk about that, but it is still profitable. We're tracking 3 times our risk, and if we were holding the 3R, we'd be up 8 times our risk at this point. And that's really, so far, the way this thing is working out is, if you asked me right now, myself, if I was going to start this test over again, what would I do? I would hold every trade until 3R, but I would continue to track 2R. I would also track 4R and 5R. So after 100 trades, I know which one is kind of the sweet spot, which one has the highest reward. So, because as you increase the reward, say from 2 to 3 to 4 to 5, your win rate is going to get lower and lower. You're going to lose a lot more trades, but your break even is also going to be much lower. As you see with the 2R, is the break even is 33%, and with 3R, the break even is 25%. So anyway, let's keep going here. And we're seeing the win rate so far, holding the 2R is just above that break even. We're about a point and a half above break even. If we remove all the errors, maybe we're 3% above break even. So it's not that great, but again, still profitable, and we're collecting data. We're learning a lot. We're not wasting a bunch of money. So all of that stuff is good. But if we'd be holding the 3R, we would almost be 5% above the break even. And when the break even is 25%, that's pretty huge. So the trade results, the individual entry results, are also pretty significant, because you're seeing trade 1 is at 23%, and we know at 2R the break even is 33%, so that seems like really, really low. We should just get rid of that trade. But remember what I said, that if I started this over again, I would hold till 3R, and 3R break even is 25%, and trade 1 is just about there. It's just below break even, so I really wouldn't change my first entry, at least as of right now. And I think that makes the plan easier to follow and easier to execute as well. In trade number 2, you can see the results are much, much better. Again, right now, break even is 33%. We're way above that on trade number 2. Trade 3 is also above that break even, but there's just not enough trades there for that to be that meaningful. The other data that I'm tracking that's helpful is how often the second trade wins when the first trade fails, because we're only trading the same ticker symbol during each trade day. So, excuse me. That's happened 19 times where we've taken the second trade on the same ticker. That just means that 19 times our first entries failed, and we've been forced to take the next entry. And how many times has that worked out? 10 times. So that's a win rate of 52.6%. Again, with a 33% break even, that's a very good number. All the other data isn't that meaningful yet, because the sample sizes are just way too low. So that's pretty much it. That is the results so far of the trading plan. I'm really happy with the way things are going. It's not easy, not to say, like, there is no trading plan that you're going to start trading and you're just going to say, wow, this is a piece of cake, and every single day trading is just a blast and there's no problems. I mean, even when you know that your trading plan is profitable, it is still difficult to stick to the plan and follow the rules every day, because you are going to have a string of red days and a string of red trades. But when you know that your plan is profitable in the long run, you are able to sustain those red days and just get through them and move on to the next day. So that's the thing. I've got strict plan and strict rules that I follow, and then the data, knowing that what I'm doing works in the long run, helps me stick to those plans and stick to those rules. That's really the essence of trading, day trading long term, and staying in the market long term. So again, hopefully this video was helpful to you. Hit the like button if it was. If you have any questions, let me know in the comment section below and I'll get back to you. As always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit targets, and in the long run, you should be green. Take care.